Welcome to the Send More Offers Real Estate Show with Brandon Barnes, showing you how to do wholesaling deals consistently without having to go on seller appointments. Learn the key tips and strategies that Brandon's students use to find deeply discounted properties that are pennies on the dollar, all while avoiding wear and tear on their vehicle, body, and freedom. Whether you're looking for your first deal or your next deal, it's time to send more offers with your host, Brandon Barnes.
Hey, welcome to the show, Reed. Glad to have you here.
Brandon, thanks for having me, mate. It's great to be here.
Awesome. I sense an accent. From where are you from?
The joke is West Texas, but originally from Australia. So
I can hear it. My daughter watches Bluey like it's her job. And so I can pinpoint it from there. But look, you're here to talk about everything commercial real estate, large multifamily. I love it. I love that topic. And I'm always interested to hear more. Tell us a little bit about your background in that space and, what the work has looked like so far.
Yeah. So just rewinding it back for your investors, your listeners, I moved to this country in 2012 and I had no idea I'd be doing what I'm doing today, over 10 years ago. So, some of the stories that I want to tell is really to inspire those people out there getting started, because I started from where probably the majority of the listeners were. And that's, I remember being fresh 2 weeks off the boat in New York City, going to a RIA, Real Estate Investment Association. And they're a great way to get your teeth into the business of real estate, everything from wholesaling to fix and flipping, and being surrounded by folks who are doing active deals. And over the last 12 years now, I've grown it to be a large multifamily syndication company. We have about $800 million in the total portfolio acquisitions over that time. And there's a lot of stories in there we can unpack, but the big thing is, like, if I can move halfway across the world and achieve it here, then so can the average person. And hopefully some of this stuff can inspire you guys to take some action.
Yeah, I love that story. And, I'm curious, did you come in knowing that you wanted to do real estate investing or just real estate in general? Like, was that something that you had already thought about in your home country?
Yeah, good question. So to the short answer is yes. So in 2009, I guess it was, before coming to the US, I picked up the book Rich Dad Poor Dad. I was 24, 25 years of age. And it was just like, I remember sitting in a cubicle of my job and going, there's more to life than this. Like, I can't just be freaking sitting here punching it. Like, I want someone to pay me to live my life and go surfing and travel the world. Like, why can't that be a thing, right? So that was the start of, like, understanding investing, or trying to understand investing at least, right? And so my background's in structural engineering and civil engineering. So it was like a natural thing. Like, I build things. Like, I could have started going buying businesses or the stock market, but it was like, I'm drawn to real estate. And so actually, before moving to the US, I was thinking of doing a splitter block in Australia, like trying to learn from the local investment clubs there, which were, I will say, nowhere on the scale of what they are here in the US. And so when I moved here, it was like I'd been bitten by the bug, but I had to, like, change my mindset of, like, the investing lingo here. Like, what's a return on investment? What's a freaking credit score? Like, how do you get an LLC? Like, all these things they exist in Australia, but they're called something different, right? So I had to change the way I was, my vocabulary, my lingo around US real estate investing. And my first property, I bought all cash for $38,000. It was a triplex in Syracuse, New York, and that was at late 2012. So within 6 months of coming fresh off the boat, I was like, let's freaking, excuse my language, piss or get off the pot, And I remember taking a Greyhound bus from Penn Station up to Syracuse. It'd take me 4 hours. The broker would pick me up. I'd cruise the market for 2 or 3 hours, and I'd get back on the Greyhound bus and come back down to New York City and be back, in New York, that later that night. So just an example of, like, the sacrifice, not the sacrifice, but the things that I was doing on my spare time to try and break into this industry. It was everything in my being to be like, I want to be a real estate investor. So
I love that. And so was that first deal, foreclosure situation, complete rehab, or,
no,
38,000 for a triplex?
Let's put this into, you're saying that, right? But let's put this into context. Like, Australia or the Western world does not have these cheap properties like you have here in the United States, right? These are tertiary, secondary markets in, it was probably a, Class D, Section 8 housing type of situation, but it got me started, right? You don't get to deal number 10 without doing deal number 1.
Right.
And I got to a point where I was like, I remember being on the subway in New York, like nose stuck in a book, reading something. And I always equate it to like going to the gym, right? You can read about going to the gym, but you actually got to freaking open the door and get on the treadmill, right? So there come a point where I thought, not that I'd known everything, but there just come a point that I couldn't keep going to seminars and weekend, RIA events. I had to like go out and do it for myself. And the only thing I could afford was a $38,000 triplex. So yeah,
that's a good start though. I think, you started off in multifamily, and I know I have buddies that have told me the same thing. Like, hey, instead of going the single family route, they came in knowing that they wanted to do multifamily. They knew they wanted to do commercial, industrial real estate, and they just focused on that. And then they got the first deal. And then right after that, and it's a story that I've heard a bunch of times. And sometimes I kick myself like, hey, why didn't I dream bigger? Right. But, I've used single family to continue to grow and level up to where now I can invest in more multifamily commercial properties. But it's just, I feel like if I had started the same way when I started, 8 years ago, I might be, at multiple, millions and hundreds of millions assets under management. So congratulations and kudos to you for that. I want to talk about that rise from the first one to the next one. What were the lessons learned? How did you put it together? And then how did you do any direct marketing at all and try to find deals yourself?
So let's just touch on what you said before. Like, looking back in the description of the story sounds like what you just described. Now, I was trying to buy the most amount of units I could. It happened to be a triplex. I also went and did some fix and flipping for a little bit of time. Like,
okay,
don't ever discount the journey that you're all on, right? Everyone listens to stuff and, the age of social media, and they need to learn to run their own freaking race. Like, if you decide to start in wholesaling or single family, that's freaking awesome. I remember looking at there's a book called, I don't know if you ever called the book Flip, F-L-I-P. It's a green cover. And they talk about in that book, like it breaks it down to like, yellow letters and find the ugly house on the street, like really, really broke it down. I was like, this is golden. Yeah. I never thought about wholesaling as something I wanted to do. It just didn't resonate with me. Like, I wanted to be an owner. I really wanted to do that. So, but don't, for those people out there, don't discredit just getting started. If it is wholesaling, if it is single family, whatever it might be, back to what I was saying before, like, you don't get to deal number 10 without doing deal number 1. And whether you're doing 10 single family deals or 10 multifamily deals, it's still freaking 10 of something. 10 of anything's a lot. You know what I mean?
Yeah.
So it's the act of allowing yourself to learn a craft that you can then apply, because this world of real estate has now opened my blinkers. There's ways to make money everywhere, not just in real estate. Like, I'm looking at businesses these days. I'm not going to get off on a tangent, but what I'm saying is that it allows you to start seeing life differently and opportunities differently. So, and everyone's got their own story, so don't discredit that. But now back to your question of like how it scaled, right? So part of the evolution of and I encourage people to think about this is, so I'm here in the US, and before I married my wife, she's American. I needed a visa to stay here, right? And I was an engineer, structural engineer. I moved to LA in 2013. I just started my own podcast. I'd started, trying to do all these things, had a mentor, I was trying to do like a wind down Wednesday for real estate. It was just like a lot of stuff, like just trying to throw the spaghetti against the wall, right? You're just trying to make it stick. You're trying to like get a name for yourself. Right. But also I realized that I had a skill set that maybe could be applicable in the corporate world. Like, I wasn't ready to quit my job. I needed a visa to stay in the country, and I wasn't raking in, enough money to quit the day job. So I went and found a developer who, like, literally, I was the structural engineer. I was working with a firm who was the structural engineering firm that was doing their projects. And I was like, hey, I'm in project management. I'm sick of engineering. Like, can you, do you have a job? And one of the groups created me a job. And the story behind that is that everyone has a mountain of value to offer someone, and you just need to understand it. Maybe you can go out and continue learning your craft and still get paid for it, right, in the corporate world and be around real estate 24/7. I actually had, by the time I quit that day job, as a lead syndicator, I'd bought over 1,000 units in a 4-year span from 2013 to 2017. Wow. And so that was as a side hustle, right? That was going to work, clocking the 50, 60 hours a week with the development company and then doing on the side. And, trust me, when I got to the end of that, I needed to go get some freaking my head checked because I was burned out, right? It was a lot of, you've got family, you've got the girlfriend, you've got, your personal life, and then you're trying to do the side hustle on the side. And it was challenging. And so, but the moral of the story is like, everyone's on a mountain of value. You got to understand what that could be. And you could offer that value to another person who could pay you to learn the industry more. And that can go for any industry. That doesn't have to be just real estate. And so be willing to think outside the box and know that maybe taking a job with this other person may not be, you're not your own boss and entrepreneur and all this sort of stuff, but it's a stepping stone to get you to where you're going to be, because you're going to amass skills to help you be that better entrepreneur in the future. So that's a very, very key piece
for sure
in my evolution. So,
yeah. And then in similar, like, that personal perseverance, being knocked down, not knowing where the next deal is going to come from, whatever, and having trust and faith and knowing that you're doing something that's going to pay off in the future. If you have mentors and you're on the right track, right, it's going to pay off. And so I think that's been integral in almost everybody's story that I've heard, is that they just kept going. Right. And doing the deals instead of saying, hey, this is too tough and getting off track.
And it's also like, you've got to keep food on the table, right? Like
there's that,
like,
very important.
Like there's so many people I hear like, I'm just going to quit my job. It's like, whoa. Let's
very
like,
true.
Don't freaking like kill the golden goose. You need to, and that's where we all as human beings are like, I want it to happen tomorrow. It's like, well, what if it takes 5 years? What if it takes 10 years? Right. Are you going to have the staying power to last that? There's the ups and downs. And when you start thinking in that type of mindset, you're like, okay, it may take me 10 years. Well, then you're going to start approaching. You're not going to sprint out of the gates and like quit the day job and burn the bridges. Now there's an element of that helps you push you, but it also is the mindset of how you approach success, whatever that might look like. So,
Love it. And so now I understand that you're leveraging other people's money, syndication, which is pulling together a group of investors to purchase these large multifamily or commercial projects.
Yep.
From the first triplex to let's say the next few deals, did you start off out the gate syndicating, or did you leverage the first property to buy the second one on your own? How did you go that route?
The first couple of deals, the first triplex helped me get the second little duplex, which helped me get into my first fix and flip. But at that point, I was like, it was my own money, right? It was just like what I was saving, rolling one from another. And I just remember having a conversation with a good friend of mine in 2013, and he was talking about, I'm like, I've got these 7 little units, I'm crushing it, and still working full time. And he is a good mate, and he comes down from Canada and he's like, hey man, I just closed on 70 units. I was like, what? Like 70? And he's like, yeah. He's like, the same things that you're doing in the triplex. He was like, but he's doing it at scale, and I'll, coming in, renovating, increasing rents, but doing it at scale. But then he also talked to me about other people's money and seller carryback financing, all these things, these key words that I'd heard in these webinars and seminars. And he was there as a mate doing it in front of me. So he's in this raise the bar for me. And one of the key things I took away from that was a mentor, right? And I knew I'd been pitched a ton of times, like, go and run to the back of the room and sign up for my $15,000 course,
right.
And I was so anti against that. But I did, after some time being in the saddle, I knew I needed someone to help me take me to that next level. And that was the coach that's good. Not that it made it all today. It was just more the fact that I was willing to bet on myself. And through that mentor, I was able to start in the syndication world. And I knew that mentor, I chose that specific mentor. I didn't choose a fix and flip mentor. I didn't choose a wholesaling mentor. I chose someone who was in the world of large multifamily because that's where I wanted to go.
Love it.
So that was the start of that journey.
Love it. And talk us through, what that looks like, because from outsider looking in, you may just say, hey, you find a deal, you find a bunch of people that have money that, will invest in the deal. But what's some of the, the documentation? Do you have to do a SEC filing? Like from going to, your very first syndication deal, what were some of the other parts that people may not understand about the process?
Yeah. So we can talk about the SEC filings and stuff like that, but also touch on like how to raise that capital, right? And that was such a cold shower. And so let's start with the easy stuff. Well, not the easy stuff, the stuff that is just more constant, right? Regardless, if you're raising money from I'm just going to preface, I'm not a lawyer, but I've done enough deals to know like the sort of the rough path. So when you're raising money from limited partners, and they don't have a choice in when the deal's sold, or they're investing, what's happening with the deal in terms of refinancing, all that sort of stuff. They're limited and they're passive in that nature, right? And so when you're doing that, you're selling a security to those investors. And so the SEC, Security Exchange Commission, has rules around what you need to do. And when you do any sort of raising of capital from private investors, you need to be able to document it through what's called a PPM, a private placement memorandum, that legally outlines everyone's roles and responsibilities, not only the sponsor, but also the LPs and how they're protected in this transaction. And that PPM sort of comes together, and on every deal we do a PPM, and every investor has to sign it. So if you are interested in passive investing or are interested in syndication, you got to understand what a PPM is. It's very, very constant. It's a stock standard form. On the other side of the coin is the how do you drum up the interest, right? Like early on, it's about building your list, building your email list, right? And I remember trying to raise $500,000 for my first deal. And I was like, I had 50 investors, and I was like, freaking hell yeah, I'm going to go out there and I'm going to get this, I'm going to get it. And it's so funny when you have a live deal, like you can talk to so many people about the theoretical deals, and it's when you have that live deal, they all scatter like cockroaches. And it was a cold shower. I think I ended up going 50 investors. 2 of them ended up investing.
Wow.
And it was just a real an awakening of like, no, I need to double down on telling people what I do and how I do it. And that's where the books came from. That's where the podcast continues to grow. And that's about where content creation today, we're doing a state of the market in 2 days' time for all our investors. We've got hundreds of people coming. So back then in 2013, 14, it was a slap in the face. Today, it's my role as a syndicator to consistently put out content to my investors around macro stuff, but also stuff within the deals. And anyone who's listening to this, always be raising capital, right? Always be building your list. And that can be applied to any business. And we're actively doing that today. And I'm sure we can do a better job, but like it's nearly a full-time job in itself, just keeping up with all the content.
Yeah. And I'm gonna deep dive that a little bit, but let me ask you, just to go back, what do you think it was the reason why, you had the 15 and then that went down to 2? Do you think that was just the lack of not having enough people to start with? Or do you think that there was an element of you were just getting going, you were new to this and you hadn't been a proven commodity maybe in this network?
But both.
Okay.
So like the investors that I had in my list were literally from my phone. We're literally from going to local RIA events and putting them in a spreadsheet. Like it wasn't any more fancy than that. And it was just around about, well, how consistently was I touching these folks, and how, in terms of content and understanding what I do, they probably looked at me as like as that newbie guy. So trying to build that trust through content creation was a very, very stark reality that I wasn't doing a good enough job of at the time.
Yeah. And so for the person that maybe is just wholesaling, or maybe they're wholesaling flipping, and they have this vision of doing this, I'm going to, put yourself in their seat, knowing what you know now, would you say that you should start, like, how would you suggest that they either start, building the list, raising capital, if they're not really doing that type of, syndication at this point, but they want to in the future. How would you advise somebody to, get ready for that?
Yeah, look, I think in general, it's all about creating a platform. Like you've created a platform here. We're talking on your podcast, right? And platforms can be a wide range of things. It could be everything from a monthly newsletter on the one end to all the way through to hosting conferences and investor dinners and all that sort of stuff. Whatever you choose your platform to be, whether it's a monthly newsletter or a podcast or writing articles, you have to do it consistently. The consistency of that. And then when you can be a thought leader in whatever space it might be, wholesaling, for example, understanding and putting out content around the world of wholesaling in a say you might be wholesaling in Atlanta, right? Or a suburb of Atlanta. Why wouldn't you then go and create a newsletter for your people who subscribe to it about the goings on of what's happening in the single family world in that part of Atlanta? That's really key for people to understand that you know what you're talking about when it comes to doing deals in certain markets, right? And so that's just requires a certain amount of hours per month to do that. Then on the other side of the coin, it's going to the local, doing the yellow letters and doing the door knocking and trying to get the leads, and then trying to combine your investor list who's reading your newsletter with the lead list to obviously create the wholesale. And so it's just around creating a platform that people can trust and like you. And the platform, all that does is shorten the period of time that people will build trust with you. If you're putting your thoughts out on a certain topic, a northern suburb of Atlanta where you're doing wholesaling or everything through to real estate syndication, you are going to create a niche for yourself that's going to help attract people to you who want to do business with you. I'm not in the Atlanta market. Would I subscribe to someone who's wholesaling in the northern suburbs of Atlanta? Probably not, but there's a lot of people who would. So it's around about niching till it hurts and then creating that platform. Again, basic as it might be, monthly newsletter, podcast. It could be even a 5-minute video once a week on what you're doing in the wholesaling world and the ins and outs of what's going on in the northern suburb of Atlanta, posted out every single week. And but doing that over time will build a following. And that's where you create your value.
That's the goal, guys. And there's a lot of people that I know that are going to listen to this that, are, in the South, maybe in around Atlanta, maybe that's wholesaling. And he just gave you an enormous gem of, just starting to think about setting yourself up for future success. And like you said, whatever that platform is, start working on it. You can't just be so focused on doing deal after deal, but start setting yourself up for something in the future. That was really, really great, Reed. And I really appreciate you sharing that with the listeners. Really great advice. Let's talk just briefly. I want to pivot to, the kind of the send more offers portion of this. Like how in your business, are you going about getting deals? I know at this level, and commercial multifamily broker relationships are super important. But are you guys, underwriting so many, that they're sending you? Are you doing any direct marketing, anything like that? How are you kind of leveraging your activity to find the next deal or do more deals?
Yeah, so very good question. And we just had a company offsite last week and we went through all the deals that we'd underwritten in 2023. Now, this is large scale commercial multifamily real estate. This is above 100 units. So in this world, you have sophisticated sellers and buyers, right? So yellow letters aren't really going to cut it in something 100 units and above.
Right.
Brokers, commercial brokers are kingmakers. They are the ones who get the listing. I've bought deals from brokers. I'm going to sell my deals through those same brokers, so they keep bringing me deals. It's a cycle. And so we looked at 119 properties, over 100 units across 5 different MSAs this year, I should say. We toured, which means you go for a tour. Like the process is you underwrite a deal. We like a deal. We're going to go for a property tour. We want to see it, Mr. Broker. And we toured 43 of them. And then we made offers on 30 of them, but we only won 2. So, you could, again, on the single family side, it's probably, you could probably add a zero to all of those numbers, but we're talking about $20 to $30 million per deal. So every out of the 43 we toured, each one of those deals is probably somewhere in the $20 to $30 million range.
Love it.
Now, we are also trying to do off market, finding of deals. And again, it goes back to we've been doing this for 6 months or so. We've got a REI Reply. If you know of that software, it's a very good software to send out text messages. We've had some success in that, but not necessarily from a deals perspective, more from creating a relationship with someone who may want to sell their property in the future.
Yeah.
We do spend a little bit of time on that, but you've also got to understand in this world, like we're running deals day to day, and what's our highest and best use for our investors? Do I need to be the broker, or do I just like rely on CBRE or JLL or Newmark to go out and do that work for me? But we have done it, tested ourselves to some extent to try and see what distress is out there that we could go and maybe talk directly with these owners.
Love it. Love it. Super helpful. The last thing I kind of want to squeeze in before we kind of break down a deal, one of your favorites, is just the seller finance, the seller carryback piece of this. How did you get comfortable with it over time? I think that's going to help because you can use this same skill set in single family for the listener. Like, did it kind of come naturally? Did your mentor help you, or did you kind of just feel your way through some of these situations with sellers and create terms that best fit yourself in the deal?
Yeah. That it's probably the latter. Like, I remember early on, do seller carryback financing, how do you even ask for it? Like, how do you not seem desperate? Like, please, Mr. Seller, like,
right.
Give me a 5% note. I think it comes down to that, the confidence when you've underwritten, 100 deals, you do that 10,000 hours in a single family world, right? Getting to the point when you've done that work, you then know what someone will want to accept. And the art of real estate investing is all about finding out their problems, right? Everyone talks about that. And it's really freaking true. As cliche as it is, and I'm sure there's a lot of people on this podcast have told you about, it's like trying to get to the root cause of why this person's selling a single family property, and how could you, by offering them a seller carryback finance, benefit them. The number one thing that people may not realize is that if they liquidate a property, a single family house, and let's just call it $500,000, they've got to pay tax on it. But if they own it outright, and they take back a 90% note, they don't have to pay tax on that.
Right.
And they can
over time.
They can put it out to a later date if they own that 100%. Obviously, there's nuances around that, but that's just a basic example of why you could persuade a seller to be like, "Hey, Mr. Seller, you've got a $500,000 property. If I paid you $500,000 today, you're going to have to pay tax on that. But what if you took back a seller carryback finance on $450,000 of that, and I pay you 5% over the next 7 years, interest only, and I only put down $50,000 today, and you become the bank. Well, you can defer your taxes, and two, you can you've now set up a passive income stream for yourself. So there's a win there. Now, I'm not saying everyone's going to be in that boat, but they're the types of ways of educating the seller who may not understand their liabilities around what they're selling.
Yeah. And then I'm sure the thing that kind of gets unspoken about is that once you're at a place where you're doing bigger and bigger deals, the more educated the owners are and, understanding of deals with terms, and, it's not so foreign, and it may be easier to negotiate, I'm assuming.
That's right.
So cool. Right. Great. Awesome. Well, look, I want to talk about a deal. Like, this is the deal diary section of the podcast. And, do you have something in mind, a crazy story, a great deal, the most amazing deal that you want to share with us, at this time?
Yeah. So because of where the deal's located, I've got to be very specific. It's located in Texas. It's a non-disclosure state. So I'm not going to give the name of the deal, but I can roughly describe. So it was a 284 unit deal. It was built in 2004. We bought it at the end of 2019. It had foundation problems. Ding, ding, ding. I'm a structural engineer. We picked it up at a 5.5 cap. This was in North Austin. So really, really quite attractive pricing at the time for that vintage of asset. We sold it at the beginning of last year. So we bought it for roughly, and I'm not mentioning the name of the property, so can't tie it.
Right.
I think we bought it for $36 million in 2019, and we turned around and sold it last year for over $60 million. It was a very good. It was very good for our investors.
Love it.
So we know now. I will premise that the last 7 years in multifamily real estate has been insane, and I don't think we will never see that again. Like doubling people's money in 2 to 3 years, and I'm very proud to say that and put that up as a championship banner. But it was definitely a freaking like, wow, this is insane, So the lessons learned from that was like good quality real estate. It was early, newer vintage, 2000 and newer, in a growing market, and we were able to pick it up when other people saw it as a problem with those foundations. We saw it as an opportunity to weed out the competition, so to speak.
Love it. Really good stuff. Awesome, man. And I'm sure that these value add opportunities are the ones where you really kind of knock it out of the park. So really, really good stuff. Now, look, I can't let you go without putting you through the lightning round. Are you ready for that?
Let's do it.
All right. Cool. So look, I have a series of rapid fire questions for you. You don't know the question. I don't know your answer. So just say the very first thing that comes to your mind. What's one book that's been instrumental in your growth as a real estate investor?
Key Person of Influence by Dan Priestley.
Wait, say that one more.
Key Person of Influence by Dan Priestley. KPI, Key Person of Influence.
Like it.
Not real estate related, but it's getting your thoughts around being a thought leader in your industry.
I like that. I'm going to check that out. KPI usually is key performance indicators. Key persons of influence. I like that. If you could have drinks or coffee with any one person, dead or alive, who would it be and why?
I think of Barack Obama, to be honest. I think I'm actually reading his book right now. Just really inspirational dude. I coming from Australia, I have a lot of respect for him. So yeah, he would be up there.
Awesome. Good stuff. Yeah. That's a really good one. What's one mistake on a deal specifically or in business in general that if you could do it over, you would take that do over?
Floating rate debt. Don't do it. It's in the last 12 months, it's been absolutely brutal on one of my deals, and it's cheap. We gouged ourselves on cheap debt, and I wish we got fixed.
Got it. And explain how that kind of comes into, so it's like variable interest rate.
Yeah, so it's variable with a rate cap. Like we in these commercial deals, you get into certain lenders, and they will allow you to lend up to 75, 80% leverage, but they want floating rate debt. So it's good when interest rates are low. But when they go up, which we saw them do that, like when we closed on this deal before the interest rate hikes, our debt payments went up 50%, and that's a big problem when you've got when you're trying to turn around an asset. Yeah. So it's floating rate debt. It's good in some circumstances, but when the Fed decides to raise interest rates from 0 to 5%, which is 500 times,
right?
We didn't see that coming. So that I would do that over again.
Love it. What is your best advice for someone looking to do their very first commercial deal? Syndication. Yeah, let's keep it at syndication.
Look, again, it's cliche, but it's really important. Syndication is a team sport. Mentors are really, really important. It's not that their mentor will spoon feed you the goal. It's about you taking a bet on yourself. And so that's really important, that you are worth spending money on getting a mentor because you want to, expand your life, expand your horizons. That's the art of doing that. And when you take that step and you pay that mentor and it can be cheap, it could be expensive, whatever you want to, you're worth it. Yeah. So that's really important.
Love it. Love it. Love it. Next question is, what's your team's financial goal for this coming calendar year? And that could be total acquisitions, assets under management, cash flow.
$100 million new acquisitions. is one of the goals. And then it's also $10 million in a debt fund that we're just about to launch in 2024.
Very cool.
So, yeah.
Very cool. If you had $500 million deposited into your account overnight, your personal account, what's the first thing that you would go out and purchase with that newfound money?
I would buy a handful of deals, obviously with that money, with leverage.
More real estate.
But I would also invest part of that in other people's deals, people that I trust in industries that I'm not an expert in.
Yeah.
I definitely would look to diversify and de-risk that 500 million by breaking it up into other asset classes, businesses, stuff like that.
Love it. Good stuff. Good stuff. Last one. What's your best advice for the person that's struggling right now that, maybe they're not stringing together deal after deal. They're looking to scale. They're looking to kind of do more consistency in their business. What would you tell that person?
Well, today, like in this current economic environment, you are not alone. We are all struggling right now to get deals in the multifamily space, in the commercial real estate space. Deal inventory is down 80%. Investors are hard to raise money from because they're sitting on the sidelines. You are not the only one. It's happening across the board. Be consistent. Know that we are in a bit of a dark time right now. We're in the winter, as Tony Robbins likes to say. Keep going and keep pushing through. Staying at the crease in a cricketing term is the best thing. Don't give up.
Love it. And this is just a little bonus question. Like with everything that's going on, the Fed, interest rate, projection over the coming year, like what do you think? Where do you think the industry is headed? Real estate, you could take that residential, commercial, everything under the sun.
Yeah.
What do you think we're doing in the next year? How does this going to play out?
So I do want to say, and I'll go on record for this, I think we're in a recession already. And I think particularly in commercial multifamily, we're seeing our tenants struggling with higher for longer inflation. A lot more tenants are, rents are down, delinquencies up. People just can't keep affording the cost of living increases, and so that's obviously affecting commercial real estate. The values of commercial real estate have completely plummeted. Commercial real estate valuations are tied to interest rates or Fed interest rates. So when interest rates were 3 or 4%, you're probably buying, deals, commercial real estate deals at 4% cap rates, right? When interest rates go up to 5-6%, you're now buying, cap rates are going to be at 7-8%. Well, now your value, the value of your asset is now plummeted. So I believe we're in a recession right now. Housing's always backward looking and takes time to catch up in terms of affecting CPI. In terms of what we're doing moving forward, obviously the Fed meets this week. As we're recording, we're December 13th. I think they'll pause. I am hoping for rate cuts next year, but I'm also kind of like the longer this is prolonged, the more pain there will be. I'm more of the adage, break the bloody thing. Let's get it over with so we can get back to doing some deals. That's what I want. So
love it.
Yeah.
Love it. Good stuff. And CPI, you meant consumer price index.
That's it.
Yeah. Got it. Awesome. Look, that's super helpful. And we learned a lot, in this entire conversation. One of the most important things you even, discussed about, the private placement memorandum, kind of helping, folks understand, what are the important things that need to happen in a syndication. You gave great advice on your journey. From your experience as well, along with, I think the biggest thing was, helping people understand hey, if you want to get to a space where you're able to do syndication and raise money, which is always going to be important, is just building your platform right now. I think that if anybody just takes that away from this episode, they'll be in really, really good shape. So I really appreciate you, Reed. And I want you to share, how can people follow you, learn more about everything that you have going on, maybe visit the website. Where can they follow back?
Yeah, so you can follow me on Instagram, LinkedIn, Facebook, Reed Goossens. That's ReedGoossens. And then you can go to my website, reedgoossens.com. If you're ever coming through Los Angeles, you want to hit me up, go for a beer, talk shop, you can hit me up at info at reedgoossens.com.
Awesome. Look, I appreciate it, man. And look, as everybody out there already knows, head over to sendmoreoffers.com while you're at it. Just, there's nothing for sale there. Just a bunch of great information from all these best guests and viewers. If you also want to connect with me here in Atlanta, if you're doing deals, would love to connect with you. That's the best place to reach me is at sendmoreoffers.com. Reed, this has been a great episode. Really appreciate your time. And man, I look forward to hopefully doing some deals together in the future.
Would love to, my friend. Let's get you on the podcast on my end, and I appreciate everything you're doing.
Love it. Appreciate it. Guys, as always, send more offers, do more deals. Till next time. Peace.
That's all for this episode of the Send More Offers Real Estate Show with Brandon Barnes. But we know you're craving more knowledge to get yourself ready for that next deal. To schedule a call with Brandon to learn more about how to do deals consistently without seller appointments in a repeatable way, be sure to visit us at sendmoreoffers.com. And be sure to tune in for the next episode of the Send More Offers Real Estate Show.